formed Oban about 4 years ago. That was Sean Rusin, my business partner, myself. Of course, we'd been active as Osisko Mining Corporation at the time, but we had some opportunities come up in South America that we were looking at. And initially, for the first 3 years of the company, we were doing grassroots exploration across the area of South America. About a year ago, we refocused the company on Canadian opportunities. As the market was getting more depressed, we saw lots of interesting possibilities for Oban. It was done specifically as Canada. I mean, we've all, within our team, the Osisko team and the Oban team, spent a lot of time and the majority of our careers working overseas. We came back to Canada in 2003 and formed Osisko Mining Corporation, which I think a lot of people are familiar with the story. It was very successful. We sold the company last year for $4.3 billion. After starting it as an $80,000 investment. So we were trying to capitalize on the information and the knowledge that we gained along the process of creating the company Osisko, the knowledge that we gained in discovering Canadian Malartic and how we would apply that to other Canadian projects in the Abitibi, which we couldn't do as a royalty company, which was the end result of the sale of Osisko last year. So we've taken this and we've basically brought this to Oban. This deal, the final iteration of this deal, had 7 pieces. It's a lot of work to put any 2 companies together in any normal transaction, and again, within our group, we've done that a number of times, and there are lots of trying moments and late nights and last-minute things that get done. With this deal, it took us from the first conversation to the announcement of the deal 6 weeks. By necessity, it was very quick. Because as we added companies to the mix, more and more people got basically under the tent and involved in the discussions. And pretty much, I think by the end, there must have been more than 200 people who were aware of the deal, which is why some of the other groups that we were thinking of fell away because they couldn't keep up with the transaction. It was actually quite a lot simpler than I think people would think. It was a lot of work, and certainly I think everybody was on the phone nonstop for most of those 6 weeks. There were lots of meetings and lots of lawyer calls and lots of tax opinions and things. But really, there was a cooperative spirit amongst the companies that were involved in this deal, because everybody, particularly in the junior mining space within our business right now, recognizes where we are in the cycle, and that's somewhere that's not near the end. Most companies have no access to capital and are faced with either closing their companies or doing a small financing if they could find someone to give them the money at a very low share price, which results in massive dilution. So the effective result of this deal was, when we put the companies together, it was done as a level playing field. We valued ounces within a certain category of mineability at $17 per ounce, and the cash shells were all valued on the basis of their cash, a dollar for dollar. So whether you were a cash shell that traded at half your market cap, reflecting your cash balance, we valued those companies at their actual cash value in the deal. And the other companies that had ounces, I mean, they might have had more ounces than some, but there are good ounces, and then there are other not so good ounces. So we focused on the ones that we felt in the current market conditions with the current pricing that would be mineable. The first process is identifying companies that have shareholder bases that are still cooperative. Or that are cooperative and understanding of the market conditions. A lot of people still think it's 2011 in terms of the valuation. When you talk about doing mergers with some groups, they say, well, we know our company's worth more. But the market's quite efficient, and the market doesn't lie. If you're being valued at 5 cents or 8 cents, that's what people are willing to pay. And unfortunately, for the most part, even when you're trading at 5 or 8 cents, there is no liquidity. So they have the ability to try and tough it out, and if you can find financing to keep the lights on, that's one thing. But there's a certainty in putting companies together with strong financial partners and a good cash balance, which is what we've done in the Oban deal, which guarantees that the shareholders aren't going to end up with nothing at the end of the day. These are the alternatives that these companies are all faced with. Try and find something that allows you to survive, or guarantee that you can survive. This deal couldn't have been done last year. It probably couldn't have been done 6 months ago. It certainly couldn't have been done 2 or 3 years ago. But in the current atmosphere, where there is absolutely almost no access to capital for the junior mining companies, it's one of the few possibilities for survival that the smaller companies have.